Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll take you through everything that you need to know to start your day on the right note. Let's start with the headlines. US benchmark yields fall to the lowest level since July as auction demand points to expectations of easing inflation. Rates on 5 to 30-year treasuries declined by at least 10 basis points overnight. The year of gains propel India's stock market to the fourth rank in the world in terms of market capitalization. That number breaches $4 trillion. US equities inch higher and look set to close the year on fresh highs. The S&P 500 is now just 0.5% away from record highs, and the Nasdaq is on track for its best year since 2003. All benchmarks are set to post a 9th consecutive winning week. Zomato gets a show cause notice for 401 crore rupees, and that's a GST demand for delivery charges. New York Times has sued Microsoft and OpenAI, accusing them of infringing copyright and abusing intellectual property. Now, US bonds have rallied yesterday. They've dragged yields down to levels not seen in months. A strong demand for an auction suggested that investors are confident that inflation will keep decelerating. Rates on the 5-year to the 30-year treasuries declined by at least 10 basis points, and that was overnight. And that's after an auction of 5-year notes fared better than expected. Yields on the 10-year treasuries slumped to 3.79%, which was a rate that was last seen in July. It settled at the 3.81% mark. I believe that reading is a bit wrong, and it should read 3.81% and not 3.18%. The dollar index has also dropped in recent times and is gravitating towards the $100 mark. It is currently at very close to that $101 still, but it has been moving closer to that $100 mark. It has in fact hit a 5-month low overnight. Oil prices have also been in focus, and they've fallen slightly, posting the largest drop in 2 weeks overnight on signs of a buildup of US stockpiles, with weak technical indicators also playing a part. The American Petroleum Institute reported nationwide inventories rose by 1.8 million barrels, according to a report that was seen by Bloomberg, with levels at Cushing also expanding. Official data on US inventories, as well as the gauges of output and demand, are due later today from the Energy Information Administration. Let's talk about the F&O cues that you need to take into trade today, particularly with the monthly expiry, and what you need to bear in mind. Joining me is Agam Vakil. Agam, morning. What are you looking at when you look at the F&O data?
Right. Well, the markets are certainly rejoicing, and not a lot of people were expecting new life highs yesterday in the final week of December, but that's exactly what we are looking at the moment, with the December futures also, along with the January futures, of course, on an ongoing basis with respect to rollovers, seeing a good increase in open interest towards fresh longs, even as the Nifty advances by an entire 1% yesterday and comfortably closing above 21,500, which in fact did have that particular call. We did have maximum open interest. Let's move on, talk about the Bank Nifty as well. Again, 48,000 conquered very comfortably, with the index also moving up by around 1.2%. 37% added in the January future, so longs there as well. To talk about the December options space, because today is the all-important monthly expiry. So as far as the Nifty is concerned, on expected lines, you would see a lot more writing in the puts. That is around 21,500, 21,600 puts, considering the Nifty closed about 21,600 yesterday. And naturally, a lot of unwinding in calls. So a lot of, traders who had in fact written calls got trapped and were perhaps forced out of their positions as far as their short calls are concerned, and that's indicated by the decline in 21,500 and 21,600 calls decline in open interest. Let's talk about how things stack up now, and well, as one might expect, that 500 point range, which was between 21,000 and 21,500 just 2 days ago has shifted higher, and it is that 500-point range now has shifted to between 21,500 and 22,000. Remember that this is as far as today's expiry is concerned. As we move on to January, I reckon that this range will more or less be the same as we move on to trade on Friday and perhaps on Monday. That's the first trading day of the new year. That said, let's also take a look at the Bank Nifty and how things are stacking up. So we don't have too much to speak for as far as puts are concerned. Of course, we're going to get you more details on puts. We don't have details on puts here. But as far as your calls go, we're seeing a little more writing around the 50,500 level. So 50,000 is now on the charts as far as the Bank Nifty is concerned. We're just about 2,000 points away, so we'll be watching out for that as well. On the whole, Alex, turning out to be a positive one. Most likely we will see strength at least in open.
All right. Thanks so much, Agam, for bringing us those details. Watch out for where we go in the opening. It's uncharted territory because we are at very close to life highs. In fact, life highs. Let's talk about the banking sector. Banks' asset quality has touched a decadal high in terms, and this is a positive, of course. And this is as the gross non-performing asset ratio has fallen to 3.2% in the September quarter. But unsecured loan growth has in fact outpaced total credit growth, and this is according to the trend of the progress of the banking sector in India reported by the Reserve Bank of India. We've got Mimantsa joining in with the key highlights that you need to pay attention to. Mimantsa, morning. What are you picking up?
Alex, yes, the RBI in its annual report has highlighted some key trends in the Indian banking space this year. So talking of the asset quality, the RBI has noted the gross NPA ratio of all banks across the board is at 3.2%, which is a 10-year high as of September 30th. All bank groups also met the RBI's minimum capital requirement criteria this year, with the capital adequacy ratio of scheduled commercial banks improving to 16.8%. So this is significantly higher than what the RBI mandates for scheduled commercial banks at 9%. Talking of the unsecured retail loan growth, which has been talk of the town in December quarter, the RBI governor has also highlighted that how the growth in unsecured retail loans has outpaced the total credit growth in the banking system. So in the report, the RBI has reiterated that the move to increase the credit risk weight in a couple of months ago was not is a preemptive move in nature, and the central bank has not seen any deterioration so far in the unsecured retail loan growth. So central bank has also highlighted the need for banks to evaluate exposure to NBFCs given the strong interconnectedness between the banks and non-banks. So several NBFCs maintain borrowing relationships with multiple banks simultaneously for their borrowing needs. So this is something RBI governor had also highlighted very recently, that how NBFCs should broad base their funding sources and not rely too much on banks for their funding. On cryptocurrency, the RBI maintained its stance that they have no intrinsic value, which is what they have seen through the recurring volatility in the crypto assets market. Another takeaway from the report is the number of bank frauds have doubled more than what they were reported last year. Right. And there is some commentary on Payments Bank as well, that Payments Bank have turned profitable in FY23 this year for the first time since inception.
All right. Thanks so much, Mimantsa, for bringing us those highlights. By the way, you can catch all of those details in the story on the website NDTVProfit.com. Now, Housing and Urban Development Corporation of India will in fact invest up to 14,500 crore rupees to finance housing and urban infrastructure projects in Gujarat. We've got Anushi Vakharia to tell us about what is a memorandum of understanding, I believe, with the state of Gujarat. Anushi, is that correct? And what can you tell us about that MOU?
Good morning, Alex. As you mentioned, absolutely what you're saying is correct. So here the government, HUDCO, has signed about 14,500 memorandum of understanding with the state of Gujarat to to invest in the financing housing and urban infrastructure projects. So this investment comes ahead of the vibrant Gujarat Global Summit that is to be held in 2024 on 10th of January. So with this, now the summit has seen about a total of 30 memorandum of understandings worth rupees 24,707 crores, which is going to create employment opportunities in the tune of 38,000. Now, do note that Government of India holds about 75% stake in the company compared to about 81% it held in the quarter ending of September. Now, if we look at the company's H1 FY24 performance as well, the company had reported a healthy disbursement of rupees 3,723 crores. So the stock has been in quite a focus with about 101% gain up to date.
All right, thanks so much for bringing us those details, Anushi. We have to slip into a very quick break. We've got stock-specific action and quite a bit more to tell you about, so do stay tuned. Welcome back. You're watching All You Need to Know. Now, we've got quite a few stocks to focus on, the likes of Canara Bank as well as Petronet LNG. We've got PFC and Lupin in focus. Varsha is joining in to tell you something about the first two. Varsha, I believe we're talking about the first two that I mentioned. What can you tell us about them?
Good morning, Alex. So starting with Canara Bank, so it has given principal approval for listing of Canara Robeco AMC on exchanges. Now this is why IPO, of course. Now, the issue will be subject to due diligence and modalities of listing will be decided on the due course. Now, this AMC had come into existence in 1993 and Canara Bank entered into a joint venture with Robeco Group in 2007 to rename the fund as Canara Robeco Mutual Fund. Then next we have Petronet LNG, where it is in pack for setting up LNG terminal at Gopalpur in Odisha, and they're going to set up 4 million metric tons per annum LNG terminal with the option for converting it to 5 MMTPA land-based terminal. Then we have Power Finance Corporation, where it has awarded transmission projects in Rajasthan. Now, projects has been awarded to Sterlite Power Transmission, Tata Power Company and Power Grid Corporation of India. Now, the projects are basically Bikaner, Nimrana, Part C, which has been transferred to Tata Power, and Nimrana, Kotupalli Transmission Part B, which has been transferred to Sterlite Grid. And total consideration for this contract amounts to almost 37 crores. Then lastly, we have Lupin, where it receives an approval for a drug which is used for treating eye conditions. Now, this drug is actually generic equivalent, which is sold by Bausch & Lomb, and the estimated annual sales is almost $29 million in the US as per IQVIA. And this product will actually be manufactured as Lupin's Pitambur facility in India.
Right. And Varsha, there's also an update on the newly listed stocks, right? We've got Anchor Investors lock-in, which ends for a few stocks. That's Fed Bank, Flair Writing and Updater Services. What can you tell us about those three counters?
So, Alex, if you see, so starting with the Fed Bank, so 3.14% equity shares of Anchor Investors lock-in will end today. And if you see this company was listed at 2% discount. So, overall, if you see, it has given almost 1.8% return to its investors since listing. And then we have Flair Writing, where almost 2.8% equity shares of Anchor Investors lock-in will end today. And the issue price was almost 304, and it was listed at 66% premium, and it has given negative 20% since listing. Then lastly, we have Updater Services, where 7.2% equity shares of Anchor Investors lock-in will end today, and it was listed at 5% discount, and it has given almost 22% return since listing to its investors. So these are three companies whose Anchor Investors lock-in will end today.
Absolutely. Thanks so much, Varsha, for bringing us those details. Let's focus in on the insurance space, and MK has done a review on these companies in the life insurance space, I believe, and we've got Mika joining in to tell us about what they've said. It's a review of the IRDAI's annual report for FY23. Mika, what are you picking up?
Yes, so the report was posted on December 27th, which was yesterday, and MK highlights some of the key points to remember. Now, COVID-19 saw a spike in the insurance claims, but in FY23, the life and health insurance claims did return to normalcy. Now, life insurance premium was up 13% year on year, which led to a 3% insurance penetration, while the general and health insurance premium growth was up 16.4% year on year, leading to a general insurance penetration of 1%. Now, despite the premium growth, the new number of life policies was down 2% year on year. When we go to the retail health insurance premium segment, the CAGR growth for FY19 to FY23 was at 19%, but this was mainly on the back of the price hikes and the increase in the amount of sum assured, as the number of people covered only grew 5.9%. The MK also highlighted the regulatory changes. Now, the regulator is focused on achieving insurance for all by 2047, and the expenses of management and regulations and payments of the commission, this regulatory change was impactful, and it helped companies have more flexibility in terms of the decision making of various expenses. What it basically did was free up the sub limit on the commissions, but it specified the overall expense limit. Lastly, MK also highlighted that the three regulatory changes, or the three initiatives, that are Bima Sugam, Bima Vahik and Bima Vistar, were ideated to raise the insurance reach to remote geographies.
All right. Thanks so much for bringing us the details, Mika. It may not be the latest updates, but important to pay attention to nonetheless. Now, 2023 has seen some tremendous success stories and a lot of multi-baggers that have brought wealth to a lot of investors. We've got Mahima joining in to tell you about some of those success stories. Mahima, across the board, there are a lot of stocks, of course. What makes it to your list today?
Right, Alex, as you rightly mentioned, this has clearly been a year for the multi-baggers. If you see Nifty 548 stocks that have turned into multi-baggers. If we talk about mid-cap, there were 12 stocks that have turned into multi-baggers, and for small cap, there were 32 stocks. If we talk about the sectors, capital goods has clearly been the winner in terms of multi-bagger. Then we had financial services and then railways. Now, if we talk about large cap stocks, Zomato and HAL were the two stocks that have outshined. Zomato turned profitable in Q1, which is why the stock has picked up. Then we had HAL, where the Defence Acquisition Council had approved the proposal for their enhancing operational capabilities. Now, in the mid-cap segment, we had two power stocks that have outperformed, that is PFC and REC. Both of them, they have very strong, robust loan growth, and they have a book size which is fairly very large. And again, then in small cap, we had multiple stocks, the first one being BSC, which is clearly outperformed because of its strong growth, and it is expected to sustain its earning momentum going forward as well. Then we had Suzlon Energy. Suzlon Energy was added to the MSCI index, and the order book also very strong for Suzlon, and the government's push towards renewable energy is what helped the stock pick up. Then we had Apar Industries, where strong financials, we've seen the profit has nearly doubled, and there is a very good infrastructure growth, which is again the reason why Apar Industries really picked up. And lastly, if we talk about the railway stocks, Alex, almost all the railway stocks have been multi-baggers this year, and we've seen, and this is mainly because the Indian Railways has taken so many initiatives. Last a few weeks ago, we saw the railway minister announcing that he'll be allocating 1 lakh crore in buying new trains. So railways is clearly it's a very good year for the Indian Railways also as a whole. So these are the multi-baggers for this year so far.
Absolutely. In fact, some of them, there are more, and there's a lot more that you can find on the website NDTV Profit. So I would encourage you to check it out. Now, we've also had a latest update from the National Stock Exchange, and in a year when the stock markets are continuing to scale new highs, India has added 1 crore new investors in the first 8 months alone. And it so happens that India trades more than any other country in the world. So either that means that we've got more traders, or those traders are incredibly active. We've got Anushi joining in to tell you more about that. Anushi, what are the key details from that NSE report?
Well, quite some strong data set from the NSE, with an addition of about 1 crore new investors, taking the investor base to about 8 crore in the 8 months of September. Now, this growth was primarily led by the options segment. Do note that India now ranks the 4th in terms of market cap, exceeding about $4 trillion now. So in the equity, it holds about a number 1 position in the derivative trading, with about 65% share in the currency derivatives and about 61% in share in derivatives across all asset classes. The number of investors also trading at least once in the equity derivatives recorded about a 31% jump and about 134% growth in the equity options. However, equity futures, currency futures and commodity options did see some decline over here.
Interesting, very interesting. It's 75% share, I believe, Anushi, in global trade of equities in terms of number of contracts. Thanks so much for bringing us those details. Let's see how it grows going forward as well. Let's talk about the Indian economy. It's shown remarkable resilience in 2023 with strong GDP growth, and in fact, we've also seen an updated figure for the second quarter of this financial year where you've seen better than expected GDP growth. The question is, can it be sustained heading into 2024? We've got Pallavi joining us to give you some perspective on the outlook for 2024. Pallavi, can the good news continue?
Looks like, Alex. So, I remember when the Q2 GDP figures came out, a research note, I think it was by Quantico, started off, saying that Q2 FY24 GDP just looking like a wow. And that viral line, possibly the most viral line of 2023, also most aptly appears to sum up sentiments around the Indian economy. And that's despite wars, geopolitical skirmishes, weaker global growth, and bouts of high inflation. So, like you mentioned, India has actually grown by a solid 7.7% in the first half of the ongoing financial year, and that's made economists push up forecasts for the remaining of the year as well. Momentum in economic activity has actually held up. For the full year, the RBI has revised its GDP growth projection to 7%. It was actually 6.5% earlier. So now Q3 GDP is projected at 6.5% and Q4 is at 6%. And a quick sentiment analysis we actually ran showed us that this sentiment around the Indian economy appears to be a global one. So let's have a quick look at what global institutions are saying. The IMF projects growth in India to remain strong at 6.3%. That's for both FY24 as well as FY25. Now moving on to global rating agencies, Fitch Ratings raised India's long-term potential GDP growth by 0.7 percentage points to 6.2%, and it reaffirmed that the economy still remains below the pre-pandemic path, to be sure. The cumulative shortfall is projected at 5.8% by 2027. S&P Ratings revised India's GDP growth for FY24 to 6.4%. And of course, the key question is the sustainability of this trend going forward. However, India's central bank does believe that that's what is going to be the case. There's a broad-based strengthening of economic activity that is underway, and that's likely to sustain. What's also good news is that CPI inflation is projected to ease to 4.6% for 3 quarters of FY25.
All right. Thanks so much, Pallavi, for bringing us those details. And that certainly seems to be good news on the economic front. Let's get you a quick update of the COVID-19 situation in the country. And we've got updates from a couple of states. Cases continue to inch higher in Maharashtra in particular, with 87 new cases. In total, there are 265 active cases currently in Maharashtra, and 103 of those are in Mumbai. At the moment, over 10,800 tests have been conducted in Maharashtra, of which 1,949 are RT-PCR tests, and the rest are rapid antigen tests. As of 8 p.m. yesterday, 10 patients have been reported as infected with the JN1 variant in the state. And former chief of ICMR Delhi, Dr. Raman Gangakhedkar, has been appointed as the head of the task force in Maharashtra. Meanwhile, Delhi has reported its first case of JN1 out of 3 samples that were sent for genome sequencing. 1 is JN1 and the other 2 are Omicron. In case you didn't know, the JN1 variant is a subvariant of the Omicron strain of the virus and is said to only infect mildly. That brings us to the end of this edition of the All You Need to Know show. But up next is India Market Open, so do stay tuned. This is NDTV Profit.
India market open. Last 2 days to go, Neeraj, and what a surge in trade yesterday. 200-point powerful move on the Nifty coming in towards the last few hours of trade.
Yeah, I know. We were talking about this, that I was saying that, hey, banks are not participating.
Yeah.
You were saying, hey, look at HDFC Bank. So I know that quabble is on, but yeah, no taking away the fact that we are trading it.
So you're giving Bank Nifty some credit.
No, I don't know whether I'm giving or no. I'm just saying it's great.
And be exciting because you've got expiry today. Global Qs